All right, John, do you know what the Chinese character for the word crisis is translated to?
I don't know any Chinese translations. No. Enlighten me.
Well, it's opportunity riding on a dangerous wind. Now, don't know if that's completely true or not. We have no one that speaks Chinese here on the team that researched this, but for the sake of our purposes today, let's assume that is true. Today, let's talk a little bit about opportunities in a crisis because that's kind of where we find ourselves.
Sounds great. One question. Can we have this discussion in English?
Yes, I can promise you that. Let's get started. Welcome in. Glad to have you once again on the channel. I'm Ben George with John Stillman of Rosewood Wealth Management. John, we are talking about opportunities in the crisis because, well, quite frankly, we're in the middle, I guess, of a market crisis, depending on what day you're watching this. But last couple of weeks have certainly been interesting.
Yeah. Well, it's some people view it completely differently. Some people view it as an opportunity. Some people view it as a crisis. Sometimes that's just like their normal take on life. Some people view everything as a crisis. Sometimes it's based on where they are right now. Like if they were 38 and they saw the market take a big downturn, wouldn't have bothered them. Now it's 68, bothers them quite a bit more. So yeah, people are all over the place in terms of how they're reacting to the last month or so in the market.
Yeah, no question. So we're going to take a positive spin on this and look at the opportunities that are out there because there are strategies that you can maybe utilize now to come out of this a little bit stronger than the way you entered it. So I kind of want to work through that a little bit today with you, John. Again, if you have any questions, rosewoodwealthmanagement.com is the best place to start. But you can also schedule time to sit down and chat with John about any concerns you have in the market, maybe your investment strategy or any kind of planning strategies you want to talk through. Go to meetwithjohn.com. So what's the first opportunity, John? Let's take us through. We got, I think, a total of, 4 to work through. What's number one?
Well, so there are different things you can think about at times like this in the market. And it's not just panic and pull all of our money out. In fact, sometimes it is the exact opposite. It's you should put more money in. Now, that's really counterintuitive for a lot of people, is to put more money into a market that's going down. But if you think about it, all that means when the market is down is that everything is on sale relative to where it was a month or two ago. So sometimes people will email and say, hey, the market's had a really bad month. Should I pause my 401k contributions until things get better? Well, no, that's the exact opposite of what you should do. That would be like you saying, hey, milk is on sale down at the grocery store. Should I wait and buy milk until it goes back up to the regular price? That doesn't make any sense. No. But that's the way people often think with their investments. Well, I'll wait to put more money in when the market is doing better. That's not the way you should be thinking. Now, obviously, you have to have the cash flow to be able to invest more. And certainly I've had clients reach out to say, hey, I'm thinking I might double down. Can we, instead of contributing $3,000 to the brokerage account this month, can we do $6,000 a month for the next couple of months? Yeah, that's exactly how you should be thinking, but that is really counterintuitive to most people.
Yeah, so increased savings definitely changes the mindset from what you might be feeling right now. The emotions of, hey, I just want to get out of here and just avoid this altogether. But this is a great time to maybe consider increasing the savings rates. All right. Next up, John, Roth conversions. I hear that get talked about quite a bit right now in terms of, hey, maybe now you should be thinking about a Roth conversion. Why would this be a good time?
So let's understand what a Roth conversion is, right? You have money in an IRA, a traditional IRA. That means you have not paid taxes on that money yet. If you're going to do a Roth conversion, what that means is you're going to take money from the traditional IRA, you're going to move it over to the Roth, which means you're going to pay taxes in the process of doing that on the money that you move over, but then it's all growing tax-free moving forward in the Roth. So that's a Roth conversion. Now, think about the inverse of a Roth conversion is when you're creating income from your IRA. If we need to get $20,000 out of our IRA, is it better for us to get that $20,000 of income when the market is high or when it's low?
When it's high.
Right, because you're selling high. That means you have to liquidate fewer shares of whatever it is you're selling. You sell high, you create that $20,000 of income for yourself. Okay, the inverse of that is the Roth conversion. With the Roth conversion, you're going to move the money over to the Roth and it's going to grow in the Roth. Well, if your tax plan dictates that you have $20,000 worth of Roth conversion that you can do this year. That's what makes sense from a tax perspective. You actually want to do that while the market's down. It's the exact opposite of creating income, because now that $20,000 that you're moving over to the Roth, if the market's down, that's more shares that you're able to get moved over to the Roth. And then when it recovers in the Roth, now it's recovering in the tax-free side. So again, counterintuitive for a lot of people, but that's a great thing to be doing when the market's down. And we've proactively reached out to some of our clients that do Roth conversions every year to say, hey, now's a pretty good time. Let's go ahead and pull the trigger on at least some of what you were planning to convert this year. Okay.
So Roth conversions, something worth talking about with your advisor if you have one, or if you want to talk with John about that option, now's a great time. Meetwithjohn.com. All right. What about from an investment front, John? I know we talked about you want to save more, maybe convert over to Roth, but what about from an investment strategy? Is there anything you want to change about your portfolio?
Well, for some people, it could make sense to do that. And I'll give you an example from the beginning of the pandemic. So more than 5 years ago, basically at the beginning of the pandemic, the market was down 30% as a whole. The S&P 500, the Dow, NASDAQ was down about 30%. But there were certain sectors of the economy that were down like 50 or 60% for obvious reasons. Things like cruise lines, or the hospitality industry, hotels and restaurants, nursing homes, any publicly traded corporations that run nursing homes. They were down 50 or 60% because the prevailing wisdom was, are these industries ever going to recover? Well, for some of our clients, we said, hey, you've got a little risk money you can play with. We're not going to do it with a ton of your assets, but how would you feel about putting some money, selling out of the place that's down 30% and buying into the stuff that's down 60%, and then experience that big recovery when it all comes back? Again, it doesn't make sense for everybody. It probably doesn't even make sense for most people, but for some people who are willing to have that aggressive take and they have money that has a really long timeline before they need to touch it, that could be a good approach, is let's get a little aggressive and creative and take advantage of the opportunity.
Yeah, certainly something to talk through with a financial professional before going ahead and following through with that. But yeah, some options there to maybe be more aggressive. That's interesting, that kind of take on it, that spin on it, John. Last one, I guess this can serve as a wake-up call, right? For anyone that is maybe uncomfortable, maybe more uncomfortable than they thought they'd be in a market crash like this. What can you be doing, John?
Well, again, going back to 5 years ago, I remember doing an interview with somebody at some point early on in the pandemic. And the question posed to me was, well, let's suppose you have somebody who doesn't really have any savings. They don't have an emergency fund. They've now just lost their job. They don't know when they're going to get another job. What can they do financially? And there's really not a great answer to that, right? I mean, if you don't have any money and you don't have any money coming in, you need to find a paycheck as quickly as you can. There's no real sophisticated solution there, right? Other than, I said, the thing they should be doing is remembering this lesson so that next time they have an emergency fund. Don't put yourself into a situation where you don't have a buffer at all. And it's the same thing here. Maybe it's too late for you to really learn from this crisis in terms of a way that's going to help you right now. But maybe you can take away from this experience something that will help you down the road. Like, let's say you're 55 right now and you're planning to work for another 10 years. And you see how big a hit you took with your retirement savings during these last couple of months. Well, that should be a clue to you of, you know what? I can't afford to do this again in 3 or 4 years when I'm that much closer to retirement. So maybe now I should go ahead and start getting some pieces in place so that I'm not subject to this kind of volatility with my money. So even if it's not an immediate fix for you, maybe you will benefit down the road by learning the lesson now when it didn't really hurt you now. But if you experience this again 5 or 10 years down the road, it might.
Good stuff. I know it's tough times like this to put the emotions aside and actually think about what opportunities are there. But as you can see, there may be some strategies here that can help you and prepare you not only to come out of this on on a stronger footing financially, but also, at least nothing else, get you prepared for the next time the market's going to drop. Because as we know, John, the market goes up, but the market's going to come back down. We don't know when, we don't know how long, but we know that it's going to keep fluctuating up and down. So good information as always. And like I promised, John, all in English.
That's the way we like it.
Take care. I'll talk to you soon.
Carolina Wealth Stewards doing business as Rosewood Wealth Management is a registered investment advisor in the state of North Carolina. The material presented is intended to be general information and should not be construed by any consumer as the rendering of personalized investment advice.